Welcome to Analyzing Finance with Nick. I'll be straight to the point. In this video, I'm going to be talking about my opinion on the recent student loan bailout being proposed by the Biden administration and why the economic consequences of this stretch a lot farther than expected. First, let's just go into the terms of the student loan bailout. Basically, it's offering up to $10,000 per borrower who make less than $125,000 a year if they're an individual, or $250,000 a year if they're part of a married couple. It could include a boost to $20,000 if they are on Pell Grants. So this is considerable money. The median student loan balance in the United States is about $24,000 a year. So that would wipe out a significant chunk of student loan debt in the United States. And on top of that, you have about 43 million Americans, which is about 13% of the population, that qualify for this policy. So what are the effects of this? But the first point really I'm going to make here is that it's going to be inflationary. Inflation is already high. It's come off from its peak, but we're still above 8% as I'm recording this. And it's not really coming down fast enough to really warrant any sort of fiscal policy stimulus. The size of this is probably going to come near the size of a stimulus check or possibly greater. And like what happened with the stimulus checks and the unemployment rate payment boosts during the pandemic, the money is disproportionately going to younger individuals who have a higher propensity to spend and are less likely to be fiscally responsible. So as a result, you now have a large cohort of the population that has an extra $300 to $400 a month to spend, and they are going to spend it to bid up the prices of goods and services. The amount of goods and services in the economy are not going to increase due to this. In fact, they may decrease is because due to a lot of people with student loan debt now no longer have it, may be less productive in their jobs or may even quit their jobs. But assuming that there's no net change to the employment market, which is my base case, you will have no increased production of goods and services, but now a material chunk more of demand through an extra $300 to $400 a month that would have been going towards student loans flowing in the economy. That's inflationary. And it's not just me saying this. Even President Obama's former head economic advisor called this policy irresponsible. And I will put a quote to the article reporting that in the description, because I think it's kind of funny that even people who are in their own party are critical of this policy. The other and more insidious side of this is not really just the fact that it's going to create this big stimulus and create more inflation, but it's the lesson that is being taught here to society. And this is why I think this is probably the third worst economic policy decision in the United States since the Cold War. The first two were the extending the unemployment benefits into 2021, and the unemployment benefit boost. And I talked about that in my video series that I did back when this channel was fairly new, about paying people not to work. And then the bailout of the banks and TARP in 2008. And the problem with TARP was that, not that the banks ended up losing America a bunch of money, because you could arguably say that the banks paid back the government at a profit. There are some sources such as ProPublica say the U.S. Treasury actually maybe made as much as $109 billion from TARP. The problem was the precedent that it set. TARP set the precedent of a bailout culture. Like, if you're too systematically big, or if you've racked up big enough of a hole that can hurt the economy, you deserve a bailout. And if rich bankers and banking executives are getting bailouts, then why doesn't the rest of the society get a bailout? And I went to college during the Great Financial Crisis, and I noticed after these bank bailouts came, there was a big shift of sentiment in my generation to basically saying, okay, now it's time for my bailout because the big banks got them. And this has led to just what I call the bailout culture throughout the world. you've seen a much higher propensity of governments acting to prevent losses and protect people who are taking excessive risk and making bad decisions. We started with the auto companies that got bailed out shortly after the banks. You saw during the European sovereign debt crisis, countries such as Greece, Italy, Portugal, Ireland, and Spain get bailed out by the ECB. In fact, based on the new programs going on in the ECB in terms of buying back selective peripheral countries' bonds, Italy may arguably still be bailed out by the ECB. You saw this during the pandemic when businesses were getting PPP loans that did not have to be paid back. And you saw, again, the PUA extended unemployment benefits and stimulus checks just going across the board and paying people not to work. And this behavior has continued to get reinforced basically since 2008. And there are several other examples of this too, like even just the Federal Reserve keeping QE as long as they did and interest rates at zero as long as they did from 2008 to 2015 was effectively a bailout of people who are underwater on their mortgages and risk asset holders to overpay for stocks and bonds that would not be viable in a normal interest rate environment. And in a financial market where financial conditions are tight enough that there's actually a real risk-free rate adjusted for inflation. So as a result, whether it's our financial markets, our economy, and just our political culture in general, is just now all used to getting bailed out. And this student loan thing takes it to the next level. I'm not even getting into the fairness part of it because that is a whole another can of worms. But the president really being set here is saying that I do not need to live up to my obligations. I do not need to pay back debt that I'm borrowed. If enough people get into enough financial trouble or collectively make a bunch of poor decisions, then the government will bail us out. And why I'm so certain that most of this cohort, I'm not saying all of them because there's plenty of people who are financially responsible who have student loans just due to situations that they cannot control. But the reason why I'm targeting that is one, a lot of people who did go to college and studied something productive to improve their human capital, their incomes do reach above the 125,000 threshold after a few years, so they do not qualify for this. Those whose families saved a lot of money to pay for their kids to go to college do not qualify for this assistance, obviously, because they don't have any student loans. Or the people who are responsible and used the time where you had interest payments of student loans suspended during the pandemic to pay off their student debt, or people who pay off their student debt early or on time and just were responsible and now have no debt, are getting punished. And then the working classes and the lower classes, which the Democratic Party is supposed to be the party that helps the lower and working classes of this country, a lot of them choose not to go to college because the costs are prohibitive. And so they are not getting this benefit. This is basically a wealth transfer from the working class and the fiscally responsible who paid for their college or paid back their student loans to the fiscally irresponsible who are over-levered and studied something unproductive in college. And that's the lesson that's being taught here, is that you get rewarded for bad behavior. And when you initiate these types of incentives into the economy, it creates a lot of negative externalities that we're not going to notice for probably another decade. Like, who would have told you that the consequences of TARP 10 years ago would be the revival of millennial socialism and the propelling of bailing out student loans? I mean, that is basically what was the lesson being taught by '08, that if everybody deserves a bailout, if even the biggest banks who made bad financial speculation decisions involving mortgage-backed securities get bailed out, we're all going to get bailed out. And now with the government saying you don't have to honor your debts or your obligations, what is that going to mean for society of the future? I mean, you could see a potential rise in default rates and other debts, or people may be demanding bailouts for overpaying for the mortgage. Say if you bought a house 6 months ago at the peak of the real estate market and the real estate market crashes because interest rates are high. And you say, oh, the Fed caused my house to tank. maybe the government should give me relief for the mortgage, just like student loans. Now you say, oh, the government's job isn't to do that. Well, why isn't it? If you're bailing out middle-class college students, why can't you bail out middle-class homeowners? Or maybe people who overpaid for used cars during the used car rip during the pandemic, or a variety of other things. And that's just some of the most obvious second-order effects. There'll be probably other not so obvious ones that are going to come because of this. And I think that when historians look back 50 years from now, on this policy, I think they're not going to like the results. That's my thought on this. Overall, we are injecting a major risk of moral hazard. You're probably also injecting a major risk of inflation. Politically, it's probably good for the Democratic Party because now your base, which is the over-levered, college-educated, but relatively underemployed crowd, now has a reason to turn out to vote because you just gave them a break on their debt. And this could easily flip the midterm elections. I'm not going to really go into my thoughts on the probabilities of those here, but this could be a very good political win, but a very bad development just for the U.S. economy and our culture as a place to do business and a place of rule of law and integrity. Let me know what you think. That's my thoughts on this student loan crisis. If you disagree, I'd like to hear your comments on why you think that this is not as bad as I fear. And if you do agree, I'd like to hear if I'm missing any points here.